As Steve Jobs said, don't let the noise of other people's opinions drown out your own inner voice. Hello and welcome to this week's US Stock Market Report. I'm Gillham, Chief Analyst at Wealth Within. This week I'll be discussing blocking the market noise, and then I'm going to dive into the charts of the Dow Jones, the S&P 500 and social media giants such as Facebook and Twitter. Whether you're a trader or an investor, contrary to what many think, being successful is not about picking the next big winner. It's very much about having a winning process. Quite simply, it's not what happens that counts, it's what you do with it that does. If you've been watching the media the past week talking about the market, you might have also become a bit worried. As you've probably heard, China has reacted to the Trump government raising tariffs on Chinese imports by adding tariffs of their own to various imports from the USA. Now, I'm not going to get into all this and explain why the falls occurred and what this means, as quite simply, that will not make you money. In real terms, the Dow Jones index fell from a close of 24,682 points on Wednesday, the 21st of March, to close on Friday, the 23rd of March, at 23,533 points, with a fall of over 1,149 points, or just over 4.5%. But the questions are, should we be worried about this, and should we be buying or selling? During the week, I spoke to some novice investors and traders who were buying stocks simply because, in their words, they were cheap because of the heavy fall. What they could not tell me was if the market or the stocks had stopped falling. And herein lies the issue. Buying a stock because it has fallen in value is a poor decision for both investors and traders. Now, I asked these same people what they would do if the stock they purchased continued to fall this week, and how would they feel about it. Now, all did not know what they would do, but they all did know how they would feel, and that was not good. If these stocks fall further, these people will do with high probability what the uneducated always do, and that is to hold on to their stocks as they fall away. They will also justify their poor decisions by saying that they have bought a good stock and that they have not lost because they've not sold. Again, this is poor thinking and poor decision making. So should we be buying or selling right now? Well, to understand this, we need to understand that just because a market is falling and may fall further, it does not mean your stocks will fall and also need to be sold. It also does not mean you should be buying. All decisions about buying and selling need to be made solely by analysing and assessing the stock itself. Generally, good stocks will give you signals to sell prior to these volatile periods, and having some simple and solid rules around managing the stocks you own is the best thing that you can do to ensure that you are more profitable. The vast majority of investors have little or no strategy about what and why they are buying, and have even less strategies about when they will sell stocks. Now, in my new book, Accelerate Your Wealth, which is due to be released soon in Australia and in the US with a special US edition, I discuss really simple strategies and techniques that will help anyone eliminate not only the emotional buying and selling that happens during these times, but give them strategies to manage and trade more successfully. So what should you be doing right now? Well, quite simply, you should be watching the stocks you own for any signal that you should exit that position. Secondly, you should be researching possible stocks to buy when the market proves it's stopped falling. Successful trading is about being in the market when the time is right and out of it when it's not. It's also about being prepared, not only with a watch list of stocks you might like to add to your portfolio when the times are good, but in having rules around exiting when the times are not. Okay, now to the charts. Our first chart I've got on the screen is a monthly chart of the Dow Jones index, and in a minute I'm going to share with you my thoughts on the S&P 500. But as you can see here, I've got a tool on this. It's called a price retracement tool. So what I'm actually measuring is the range from the low in August 2015 through to this high, recent high basically in January 2018. So from the high of 26,616 points to the low of, as you can see there, 15,370 points. So I've just haven't got my tool quite right on there. There you go. 15,370 points. What I'm doing there is measuring how far the market will actually fall with probability. And looking at these tools, you can see here how, as we talked about a little bit earlier, the high is January this year. Last month we had, in February, there was a range of 2,946 points. Quite a large move. Remember, early in February, there was some couple of really big falls in the Dow Jones of over 1,100 points in the Dow Jones. That started signaling that the market is starting to get a lot more nervous, and the downside moves are likely to happen. So it was signaling to us that the Dow Jones may start to fall away. We did open up this month in March at 25,024 points. Now it's going down and right on its low of 23,509, and it closed almost on that low on Friday. So what we need to do is, once we see that low here of 23,360 points broken, this market is heading south. As you can see, the level of support 22,320 and 20,993. I think it's probably going to go closer to the 20,993. It could go a little bit further. I don't think we're going to get into that realms of crash type words. I know media love to use those types of words, you know, meltdown, crash, GFC, those sorts of words. Don't be panicking on those. Good stocks will tell you when to get in and when to get out. As I was mentioning in my report, and anybody purchasing my book will know the strategies to protect themselves. What we did during the GFC, using the strategies that are in that book, is protect everybody's portfolio. And you can do that too with just a rule on a pencil. You don't need to make it very, very complex. Now let's go into the S&P 500, and we'll just bring up that chart, and I'll show you. I've got a bigger range on this one from the 2008 low, which is the low, March 2009 low, which was after the GFC. As you can see there at 666 points, right through to the recent high in January there at 2,872. Got the same, measuring the same sort of range, or not, I'm measuring a longer range, sorry. I'm using the same tool, and as you can see there, that first level of support is 2,030 points. So it wouldn't surprise me for the S&P 500 to get down to those levels. Now, I know recently we've had in the news, Facebook's been in the news, Mark Zuckerberg has been in the news a lot lately with what's been going on with data breaches or selling data off to big companies, etc. So it really does augur not very, very well for Facebook shares. So that's why, or stocks, that I thought, well, let's have a look at those. As you can see on the screen, I've only just got a weekly chart on Facebook here, and you can see here the major low down in 2012 was at $17.55, and wouldn't you have loved to have bought it back then? And it's been an absolutely magic trend all the way up, and you can see here what I've done. I'll just bring up a monthly chart in a minute, but you can see here to the recent high, and I'll put that on my pointer on there, February this year, $195.32, and as you can see there over on the right, again of 1,012% in that time. So in 6 years roughly, you've made a very, very good return. There's a couple of things that worry me a little bit about Facebook. If you own Facebook shares now, looking at this, I've just drawn an uptrend line on this, and just some real basic rules on trend lines means you would have exited somewhere around where my pointer is at around that $175 mark here. So that's one reason, if I own that share at that particular time, I would have been exiting on that rule. Second one is, we can see here that previous peak here at 186 is lower than the one we had in February, and we've now broken the previous trough, which is that low of $167. So there's two big reasons here why Facebook stock is likely to continue to fall away. So right now I wouldn't be owning Facebook stocks. I would have got out of them weeks ago. Good stocks like this will always tell you when to get out if you got some basic rules around it. And that rule I've just used, that trend line, you can just have a rule on a pencil to do that. And as I said, I do show people how to do that in my book, so watch out for that one. Let's go and have a look at Twitter. I wanted to compare and contrast that with another stock in the similar sector, Twitter, obviously in the social media space. Now this is looking a lot better than Facebook. So if you're looking at social media space, then this would be the stock you would look at out of those two. As you can see, it did fall heavily from around December 2013, coming right down to a low in $13.73 in May 2016. It made a slightly higher low there at $14.12 in April of last year, and since then has moved up. There's a couple of rules to buy. We could have bought that on a trend line. We could have also bought it on a couple of other theories, somewhere in and around this sort of area here at around that $20 mark. Currently, as you can see here, it's sitting up at around $30 mark. So it was a nice little profit over a few months that you could have got in just using some really basic rules and tools and some strategies. Right now, if you're in Twitter, I see no reason why you wouldn't stay in that stock. Would I be getting into it right now? No, I wouldn't. I'd be just waiting for a little bit because you'll get another chance. We might see it come down for another month, 1 or 2 months, and just test these sorts of levels at around this sort of $20 mark. If it does get a downward month next week, when it starts to move up again, nice point to start to get into that stock and make some nice profits on that as well over the coming years. So that's the end of my charts this week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.